Hello everyone, my name is Erik Miller and I'm a passionate mortgage expert, and this is Mortgage in a Minute.
If you want to win it, mortgage in a minute.
If you really want to win it,
Mortgage in a minute.
What I've learned in my YouTube world is that sometimes wordiness does not always equal happy subscribers and viewers. So I'm trying to get you some mad hot mortgage information in a super compact form, like Tide Pods. Those things are a miracle. Anyway, yeah, this is like the Tide Pod miracle of mortgage information. Highly concentrated. Clock, please. Clock. Good. Okay. Now I have 1 minute plus 59 seconds, if necessary, to dig as deep as I can into a subject that I picked from this totally random and ridiculously complicated process that involves this cup and tiny slips of paper. Okay, I'm gonna do the best I can to give as much information as I can, but no matter what happens, this video, this clock stops at 1 minute 59 seconds. Pressure's on. And I'm worried, but I'm not that worried because I have a secret weapon. My brain. No? Okay, here we go. I'm gonna pick the topic out. Totally, could be anything, could be random. Krebs cycle. That's the topic. Obviously, Krebs cycle is code word for FHA loans. Woo! That was a close one because I know a lot about FHA loans. Okay, so we're gonna talk about the specific general thing for FHA in this video, and we're just gonna keep getting more and more specific until you know everything that's important about the program and the opportunities that it provides you. I'll tell you what we're not gonna talk about in this or any other video: the history of FHA, when HUD started, or any other thing that most mortgage and real estate people talk about on these videos to sound clever and smart. What really gives a rip when HUD started anyway? I mean, it doesn't impact you. The bottom line is that you only care about the bottom line. And I don't want to waste your time, which is why I'm going to keep rocking this rhyme like an optimist. Come on, you got it. Anyway, so that's the end of my 3-minute preview setup for my 1-minute video. Are you ready? Let's go. FHA loans are government-backed loans that are often used for first-time home buyers or those with some credit challenges. The reason is because FHA loans have a wide variety of things they're willing to accept based on the financial profile of the applicant. I'd love to get into greater details about this, but I've only got 15 seconds, and that's at least a 4-minute explainer. FHA requires a minimum of 3.5% down for purchase loans. For refinance loans, you can do a streamlined refinance, which is like a cash out with minimal documentation in order to reduce the payment, or you can take a real cash out at 85% loan to value, but that's typically a terrible idea because of the next thing. The next thing is mortgage insurance. FHA mortgage insurance. This could blow up the whole video, but I'm going to go for it. Even if you put more than 20% down to buy a home and you get an FHA loan, you're still required to pay both upfront and monthly mortgage insurance. With an FHA mortgage insurance premium, you pay upfront 1.75% of the balance, and monthly it never goes away. So if you want out of it, you're going to have to refinance into a conventional or sell. Next, the big three: credit, assets, and qualifying. There's so much to this, so let's dig into it. Credit: 580 minimum credit score, 640 for down payment assistance if you want a DPA. If you're buying with a 580, however, your credit still needs to be clean, but not impacted by the score. People talk about a 580 all the time, but the reality is it's rarely worth the extra cost or aggravation when you could just as easily raise a little bit of money, wait a couple of months, and get a much better deal all around. Next, you can't have any mortgage lates or collections judgments in the last 24 months. The only exclusion is medical collections. Number 2, assets. 60 days of bank statements are required. On your earnest money deposit, you have to be able to source the deposit. No cash mattress money is acceptable. This is true of all loans, but I thought it was worth mentioning. Lastly, now qualifying, the big ones outside of credit and assets: job history, residential history for 2 years. You have to have a 2-year continuance, and you can't have previously defaulted on any government